Over the next 24 hours, the currency to watch will be the euro. The biggest event risk of the week is the European Central Bank's monetary policy announcement. And in fact, this is one of the most important ECB meetings of the year. The reason for that is because the Eurozone economy has deteriorated so much that the ECB is widely expected to announce a massive stimulus program. The euro has dropped below 110 on an intraday basis ahead of this monetary policy announcement, which just goes to show how dovish investors expect the ECB to be. Now, of course, 110 is still the main support level to watch because while we did dip below that in Wednesday's trade, we ended the day right around those same levels. The ECB has, a lot of measures that at their disposal, and there's no question that the Eurozone economy needs help because since the last monetary policy meeting in July, we've seen deterioration in retail sales, lower inflation, weaker manufacturing, and basically broad-based weakness in the Eurozone economy. Germany in particular is at very serious risk of recession. Growth contracted in the second quarter, and the Bundesbank, which is Germany's central bank, came out and said there's a very good chance we're going to see a technical recession in the third quarter. The situation seems so dire that German officials are openly talking about fiscal stimulus to support the region's largest economy and to avert a deeper, more prolonged recession. So the question is, what are the options at the ECB's disposal? Well, back in July, ECB President Draghi said they believe that a package or more comprehensive package of measures would be more effective than selective one-off actions. So, among the options include an outright interest rate cut, which many people anticipate. The second option is a change in forward guidance to indicate that they may cut rates further or rates will remain low for much longer. They could also provide some sort of compensation to banks for the negative interest rates. Rate tiering has been talked about, and the biggest bazooka would be quantitative easing. Quantitative easing is one of the nuclear options for the central bank. There seems to be a lot of resistance amongst various policymakers, from the Dutch to the French, who don't necessarily think that conditions, while they tend to be subdued, are weak enough to warrant such an ultimate move. So they'll be pushing against QE, and that's where the ECB could disappoint. Euro, as I said, has been very weak. Last week it actually fell to 2-year lows below 110. And so if we do get the ECB under-delivering, we could see an aggressive short squeeze higher in the euro. So what would under-delivering look like? Basically, that would mean they would hold off QE, and Draghi would leave that as a option for his successor, Christine Lagarde, when she becomes ECB president in late October, early November. And that could be the choice that he makes, because he may want to leave her with some additional ammo to fight a deeper slowdown in the economy, something that could provide in of itself a big shock and represent a bold move on her part. So there is a good possibility that we could see the ECB disappoint. At the same time, though, as I said, the economy and growth has been, quite weak. So they need to do something, and perhaps, he may not need to wait. So 110 will definitely be the level to watch. If we get an aggressive stimulus package that is very, very dovish for the euro, I think next stop we'll see the pair is probably 107, 108. However, if they underdeliver, we could easily see a short squeeze above 111, 112. So that's what we're looking for in the next 24 hours.